It's time for the big three. We've got 3 stocks and 3 charts to take you through. Rick Ducant will take us through the technicals. Here to take us through his picks today, Aquiles Larrea Jr., the founder and CEO at Larrea Wealth Management. Great to have you both with us. Aquiles, welcome back to the show. We've missed you. It's been a little bit since we've last talked. Would love to get your thoughts on the market action we're seeing so far this month and even this week. It's been a bit of a wild ride.
Yeah, absolutely. Good morning, Molly. Good morning, Rick. Wonderful to be back on the show. It's a lot of great things that are occurring in the market right now, but it's kind of a mixed message right now. We're starting to see consumer confidence is challenging at this point. Inflation is a challenge. Even though it's at 3.4%, we still see high pricing in the retail sector. The tariff situation is troubling to us as we're not really seeing a resolution per se. And also the dollar weakness has also troubled us at this point. But that doesn't mean, that it's like the blizzard here in New York. We're already digging out and we're heading towards the positive direction in terms of the market. So what I see going forward, as far as we're going beyond tech. We're seeing tech, yes, playing a pivotal role as far as the growth, as far as earnings are concerned, but we're also starting to see the sector rotation occurring. We're going to face some near-term resistance on the stalwarts, on the magnificent seven, but we're going to see growth in these areas and a few new areas that are they being affected by AI, and how can they really take advantage of this at this point?
All right, Aquiles, so that brings us to your first pick, which is in that area that you just highlighted that we might see some pullback in, but you still think it's a long-term play. So let's talk about Microsoft.
Yeah, Microsoft is one of these stocks where, they're making a huge investment, $50 billion in the AI sector. And what people forget is that we've seen a huge run up, and I'm sure Rick will confirm this. We saw a huge run up in just the near term. And let's go back about 90 days, huge run up in the stock. Hasn't really corrected in that time. And now we're seeing a bit of a correction and everybody wants to run to the hills. We say that that's bunk. It's time. We believe that the stock, if you're going to go in, you go in when it's getting beat up. So as kind of a value play, but not, you can get in there and make 10 to 12% at this period in a 12 to 18 month period. We believe that the stock is well positioned to take advantage. It's a dominator, I believe, in the AI sector. So you want to own this. You want this in your portfolio as a whole. It's not the only play. We know that. But at the same time, we think it's the one with the most value at this particular point. You're going to face some near-term resistance. And if you need to quietly accumulate, buying at different entry points, then you're going to do well overall. Just don't put it, a huge amount in one trade at this point. You want to kind of space it out over a month period if you can as a trade. So that's what we believe is the best way to get into this stock at this particular point.
All right, Rick, so as we take a look at the technical setup here, not supposed to be an all-at-once trade here, but what are we looking at as far as the setup if you were to make entry now and then over the next month?
Well, the situation is that we have a stock that's been pretty beaten up and we're near some important low points here. If you were to backtrack over here near our April tariff news shock event here, you can see this was a significant low point here. Some of the standout price levels include our worst close at 354.56 to be precise. That's our green line here. And then a gap here that formed here near about 368. So those would be some downside levels to consider. Also notably 396 you can see here. A repeated ceiling for price and also where a gap began. That's about where we were holding on before we had our eventual drop and our decline below that level. So now we have a falling wedge type shape here, 2 trend lines converging toward each other, both pointing downward here. Typically regarded as a bit more of a bullish type of setup, but really it can go either way. What you'd be looking for would be a break beyond either of those 2 lines. So if we were to look also at some of our other studies here, we can see that we we have our moving averages that we follow. We are below our 5-day weekly EMA in dark blue there, near 392. They're all trending lower. Price is below all of them. There's no signs of the trend shifting just yet at this point. However, RSI is actually perhaps a bit more positive than it may seem, even though it's oversold. And at the 29 mark here, we do see a little bit of bullish divergence here. So you can see that RSI made a higher low while price made a lower close. So there's a mismatch in terms of momentum here that could be a bit more of a bullish sign. Finally, our volume profile study shows we are in the thick of a larger volume node here between about 383 to 404 or so. If we do start to move too far below that level, things really do start to thin out. And then to the upside, things pick up again here near about 430 to 440.
All right, and right now we are at 386.10 today, trading about 0.4 higher. Most of the Mag 7 actually higher on the day. Just looking at Meta and Alphabet, just slightly below the unchanged line. Achilles, let's talk about your next pick here, where we're changing industries here, changing sectors entirely. Caterpillar.
Yeah, Caterpillar is a great stock. If you look at what happened last year, had a huge move to the upside. People think that the opportunity is over, but I want you to look into the future of Caterpillar. The AI that everybody's talking about in an infrastructure play. So you can easily get into this stock, make 8 to 10% in it. We believe that the heavy machinery, that their specialty is going to be dominated, and AI is going to be pivotal in the sector. The question now becomes, are their competitors going to come in and take away market share at this particular point? I don't think so at this point. I think that Caterpillar is uniquely positioned with its heavy machinery. I think once that we see that widespread adoption of AI across the sector, they are going to be dominators. They're going to be leaders more so than they already are. And as I've said on past broadcasts, they think they're a growth stock right now, and they're sure acting like one.
Yeah, certainly. And you mentioned that move to the upside that we've seen, in the last year. They've run up about 127-ish%. But even year to date, an impressive pop to the upside, up more than 30% so far this year. So, Rick, as we look for Caterpillar, you can see these explosive moves that I was just talking about. Take us through the technicals.
Right. So we had our ascension here between our two boundary lines converging toward each other. Then we had this rather sharp upside breakout spurred on by earnings. So now we had our upward sloping channel type shape that seems to have been broken for now. We have a shorter term range between the boundaries of about 743 to about 775 or so. And what interests me about this is that it's kind of matching up with that bull flag and bull pennant type of setup here, where we have a very sharp rally here. We have a brief period of sideways to downward consolidation. And then what you'd be looking for if you had a bullish outlook would be for the breakout to happen, for price to exceed those initial highs after our pullback to a supportive level, and then for the trend to continue here. So that would be a pretty common setup that many traders would be on the lookout for in this case. We can see that price is above our weekly 5-day EMA in blue that comes in near 762. Our teal monthly 21-day right here near 724. That could be another downside supportive level to consider. Now we have kind of the opposite situation here a little bit, where we have declining momentum with kind of more stable price highs here. We are making a marginally lower close here, but momentum has fallen off a bit more here. So now we're seeing momentum fade somewhat at these highs. So a bit of a warning sign perhaps, but notice as well our green trend line is still in play here, and we're on the verge of crossing back into that overbought area. So this could really change very quickly if you start to have an upside breakout. We are in the midst of this volume node here, 750 to 775. Not too terribly much to consider until you get back down here near about 640, 650 or so. And there's some other pockets, but those are the nearest ones that stand out.
Yeah, and trading, about more than $100 higher than that lower volume area you highlighted. Right now, about 769.36. We are almost 2% higher on the day, though. Now, let's move into this last pick here, Achilles. We're talking about Rivian, a bit of a battered space here. So take us through this EV play.
Yeah, here's one that everybody might be scratching their heads with thinking about because the entire sector has been beat up. You know, the talk is that there's a slowdown. I am seeing more electronic vehicles every day on the streets. I'm hearing that Rivian, you know, why you want to own this particular stock is that you don't need much of a move to the upside to make 8 to 10%. We also think that the opportunity, the potential in Rivian is in the lower tier that they're coming out with in terms of the lower price vehicles. And we think that's the growth. And so does Rivian. They think that's the growth of the company. They say by 2027 that we should see a significant improvement in terms of market share on the low end vehicles coming in at about 45,000 or so. But a healthy move into that space could bring some shareholder value to the stock, see decent dividends. But this is one, you know, I would say don't bet the farm on. You put in, you accumulate quietly, but you don't need to accumulate a huge position to make some decent money. This is what I call frosting on the cake, where you go in, you buy this, and this, so what will happen is you're having a decent year in your portfolio. Rivian could be one that could take it to the next level. So don't be afraid to get in there, buy it at a couple of entry points that make sense. And like I said, you don't need a big upside in order to make that 10%. Be strategic, be smart with your money because you're going to make money on this trade in the long term.
Despite the downward move, we're seeing the plus 20% to the downside so far this year. It is hard to argue with you, at least in Chicago. I only have a mile drive to work. I saw 4 Rivians this morning. So they definitely are appearing more regularly on the roads, at least in major cities. But Rick, as far as the technical setup, and Aquiles highlighted, make sure you pick some key entry points here and don't bet the farm. Where might we see some of those points?
I think I would echo, too. It's pretty common to see those kind of distinctive oval-shaped headlights now when you're driving around. I see it pretty much every day. I see them. But anyway, a volatile stock here. We've more than doubled from the lows to the highs here. Now we've lost a third of the value from those highs. So a bit of a bumpy ride here, to kind of use a car pun, I guess. But we had our earnings pushed to the upside here. We topped out near 18.25, which is about where we had a gap level. So that stands out. But now we've also filled the gap that formed here. So we had a very sharp drop off from those initial highs. Now we've retreated and filled the gap here near 15. So this seems like a really interesting position here to make a potential play. If you did have more of a downside bias, 14, low point here, that seems like a potential breakdown point, and then another gap here near 13.25. Repeated kind of stopping activity around 12.50 as well. But if you were more interested in the upside, 15.75, old highs and lows, a supportive point here before the breakdown. That could be another area to watch, as well as 17, 18, 25, like we said as well. So if we were to look at our moving averages now, they're kind of consolidating closer to each other. 15.35 or so is kind of 15 to 16 rather is around where we have the general range for these 4 moving averages kind of coalescing together. RSI still trending upward below the 50 midline, but green trend line that's pointing upward still in play for the most part. Perhaps a bit of a fluctuation below depending on how things shake out today. Finally, volume profile. We can see that we have a bit of a decline in the activity once you start getting below 15. Things are mostly concentrated 13 to 14 here. But if you were to move up, 17 to 18 also stands out. Then things really start to thin out above 18.
Yeah, and right now about 15.23, although again on this one higher on the day. We're up about 1.8% for Rivian today. Aquiles, we want to thank you for being with us for Big 3 today. Always a pleasure to have you on the show. Aquiles Larrea Jr., the founder and CEO at Larrea Wealth Management, and of course Rick Ducat, our lead market technician, for always breaking down the technicals for us.